10. Hello, I'm Jeremy Allaire, and welcome to The Money Movement, a show where we explore the issues and ideas driving this brave new world of digital currency and blockchains. I'm very excited for this week's show. It's been a big week all around. Yesterday, we launched USDC for Solana. Center announced it as an official chain for USDC. Native USDC launched. It launched on leading exchange FTX and in emerging and very exciting DeFi project Serum. Bitcoin crossed 13K. It was exciting to watch that happen on USDC on top of the Serum DEX. And we're going to talk about that. We're going to talk about why all this is so important. And I think the kind of bigger focus is going to be kind of zooming out and thinking about a few kind of big picture items that are really facing our industry today. So one is really just layer one blockchains. Where are we? There's incredible innovation happening on chain. How do we meet the demands of that? Whether it be like scaling out global consumer payments or scaling out market infrastructure, scaling out DeFi, really critical topic. We're going to drill into that. DeFi itself, some of the fundamental primitives that have been built by leading firms. What is the future of that? Composability on these different layers of blockchains. And then ultimately, like, what are we building here? What do these crypto markets look like? We kind of see a glimmer of that today on DeFi, but what is this infrastructure? What is this all about? What are we ultimately building? What is that going to do for the world at large? So we're in the here and the now, and many of the things that a lot of us have dreamed about for years are really becoming possible. And I think we're now entering an era where this can really, truly, deeply begin to change the world. So I love to have amazing people and projects on the show, and I'm really blessed this week to have, I think, two of the most talented and innovative people in the crypto industry here today. So really excited to welcome Anatoly Yakovenk, who's co-founder of Solana, and Bankman-Fried, who's founder of Alameda Research, FTX, and has helped kick off Project Serum. Welcome, guys.
Yeah, thanks for having us.
Yeah, thank you for having us.
Yeah, there's so much to talk about. I'm going to keep this like super simple, just up front. Maybe just quickly, like 60 seconds on like what you're working on, and then we're going to get into a bunch of these topics. Maybe Anatoly, I'll start with you.
I'm working on Solana, which is kind of this hyper fast blockchain, and my day-to-day is just trying to make block times smaller and smaller. It's around 350 milliseconds today, so pretty proud of
that. That's a good project. All right, I like that project. That's awesome. Sam, how about you? That was 30 seconds, but you get.
Oh boy. So my name is Sam. I'm sort of primarily doing two things. The first is running FTX, which is a global crypto derivatives exchange. And I mean, day to day, that's just a really wacky variety of things, from, thinking about what new products to launch to responding to irate customers over email. With the rest of my time, I'm shepherding forward Project Serum, which is a decentralized ecosystem on Solana. And that also is sort of a wide variety of stuff, a lot of which is figuring out what things people want or need in order to start building on or using Serum.
Yeah, that's awesome. We're gonna dive into that in a whole bunch more detail. I want to start with the first topic here, which is sort of layer one blockchains. And I talk to people about this often, and there's lots of different metaphors you can use. But we're sort of in this phase of like these third generation blockchains. Solana very much is a third generation blockchain. Sort of Bitcoin being first generation, Ethereum being second generation, and things like Solana and others, these third generation. And I conceptualize this, and you can help me if you think this is reasonable, but like I conceptualize these third generation chains as essentially like new internet operating system layers that are being built that people can build on top of that have built-in primitives for executing code, managing, storing transactions and associated data, and doing that obviously in this sort of open, permissionless way. But I think for people, like, why is that important? It's kind of like when we moved from dial-up to broadband, and in fact, in reality, like, a lot of the problems that we're trying to solve is about throughput. It's about speed. It's about how big are the pipes, as it were, to be able to do this. And I guess maybe starting with you, Anatoly, how are you thinking about these things when you think about what you're trying to accomplish with Solana? Do you look at it that way, and then maybe just make the case for Solana a little bit?
Yeah.
Here.
So I kind of got bit by the bug of like layer 1 and blockchain in a similar way as you described. It's kind of a new kind of operating system. It's a new way to run and deploy code that kind of runs there forever. It never gets shut down. That's a cool kind of geeky thing. And the way we've been approaching it is we kind of thought of, what is like a lighthouse like demo or use case that we could really go after that really proves this entire space. And fundamentally, I think trading and price discovery was this kind of like the hardest problem. How do we build a system that's open to everybody to use, where it's fair for people to trade and market make and do price discovery, such that there's no like central party that can, screw anyone else, right? Like, how do you actually like get it to a point where it's transparent and fair? That's really what kind of we've been focusing on, is building this project, like this operating system to support that. Because once we kind of accomplish that, really all the other use cases, which I think might even be bigger than just trading on its own, from social networks to payments to everything, would work there as well, right? This is kind of like, you build Windows to run a spreadsheet, right? Or a browser, and then like everything else is possible.
Yeah, having these, immutable data structures and programmability and scale, like, absolutely. I know like Jack Dorsey and team are thinking about like their own protocols for being able to do decentralized Twitter and so on. Theoretically, right, you could do that on something like Solana.
Yeah, and like what I see now that's really kind of like exciting is that I think we've solved this, like, the puzzle of getting information that's replicated on these systems in a very quick and short time frame, to where you can post a trade and you see it notified and being in the order book like almost immediately. So that looks and feels like a central system that users are not even going to know that they're up, like using like, centralized, like a decentralized service versus a centralized one. And I think this is where like innovative teams like you guys can now start like actually breaking out into like the space of like competing with like the Visas and MasterCards and kind of the established companies, to where they don't have any advantages anymore, right? To me, you guys now have all the advantages. So this has been like my dream, like the last 2 years working on this, is getting it to this point.
Yeah, it's amazing, and this has been the dream, right? This idea that you could have representations of value, fiat value as well, that could just transmit at the speed of the internet, and with the interoperability and openness and cost efficiency of all that, and effectively moving value becomes a commodity-free service on the internet, right? So we're approaching here. I heard you talk about, and you said it in your intro, like this obsession with speed. And I heard you, 350 milliseconds. That's pretty good for a decentralized. That's amazing, for a decentralized system. Right? That's computing and processing transactions. I heard you talk about wanting to get to effectively like the speed of light on fiber, right? 80 milliseconds. Yep. And like people who are like into electronic markets, like that's meaningful, right? Because you think about information moving, and then how do you respond to that? And is that in reach?
Yeah. So this is where like I think that this kind of lighthouse, like making Serum like as good as the New York Stock Exchange.
Yeah.
This is what like we've been obsessed with internally, and because if you have a system that can propagate state transitions as fast as the news, it's going to be as good as the New York Stock Exchange at price discovery. Yeah. You're still going to have these like local high frequency trading markets, but all they're doing is like taking orders from their customers and then doing statistical arbitrage against a global price point. Sam will probably have like a bunch of nuances and yes and no, but like this is my understanding of it. Like we can get to that point. We can actually go faster than fiber because you can build neutrinos that go through the center of the earth at 40 milliseconds. And I fundamentally believe that if one of these networks, if Solana is the financial, like infra for the entire globe, it's worthwhile to go do that R&D and do that to cut those 40 milliseconds.
I mean, we're going to come back to this in a little bit because I want to talk about sort of crypto markets, capital markets, like, this concept of like markets much more writ large. Like, it's a huge concept. It has huge implications, but like tokenization of information and the ability to exchange value around that and other things become possible in this realm. And you see experiments with that with information markets today, but you can imagine that exploding, right, and being much larger.
I mean, you look at like advertisement, right? Like that's a tradable market where people buy and sell pixels, very small numbers, right, of like being exchanged like at constantly. And I think that's one of those use cases where if we succeed, we can transform the web from being like parasitic to like stealing your data to like actually being, symbiotic with you and your environment and like how do you consume news. So to me, there's like just kind of like all this stuff is good. Like it feels like a really good mission to work on this.
And being able to move a fraction of a cent of value for a significant fraction of that, like people go, why would I need that? Well, because you can revolutionize the business model of the web, right? You can do some pretty amazing things with that. Sam, I want to talk about layer 2 and your choice in launching Serum and working with the Solana team and looking at what's happening out there and sort of saying, you obviously have a deep understanding of like what markets need to do and what the information needs to be on top of those. And just, I'd love to hear your thoughts and then I'll follow up.
Yeah, I mean, I think to echo, some of what you guys were pointing at, I think one place where I definitely think about, choosing chains differently, certainly chains sort of broadly understood as, including both layer 1s or layer 2s or whatever, is, rather than thinking like, what's sort of like, what's the biggest pressure point with the thing I'm trying to do right now, which I do think is important. I think I also kind of like try and take a step back and say like, where are we actually trying to go? Mm-hmm. And what does that mean? And I think the big difference between that is when you ask the first question, when you ask the question of what's the biggest pressure point, most people will say it's scaling, like it is throughput, it is speed. The like Ethereum as it is isn't scaling enough, and we need to do something new. And there's a lot of suggestions, whether it's some other layer 1, any layer 1, whether it's a layer 2 with some roll up, whether it's waiting for ETH 2.0, and a lot of those can solve the problem of making most of the current Ethereum apps, more cost effective. But that's sort of not the end goal. Like the end goal is you're thinking you want 1 billion people to use this. The end goal is like, what happens if instead of saying like, can we do a trade, you say like, can we do most of our trading on this chain? What happens if, as you guys are saying, like, could Twitter be on chain? Yeah, it could. Like, there's no reason it can't, And so you expand from like this set of narrow things we're looking at now to like almost like, a blacklist instead of a whitelist of like, what things can't we get there and can we get everything else? All of a sudden, you're not saying like, oh shit, we need an extra factor of 10. You're saying like, like we need as much as we can get. We're trying to go from 1,000 people to 1 billion. Like, and so the first thing that I would say is that like everyone knows that like somehow we need to have something faster, but I think it's not just like a binary of like faster or not faster. It's how much faster, and I think how much faster really matters. And faster also means kind of 2 different things, although they're correlated with each other. One of which is throughput, is like how much stuff can you have on chain, which is sort of a lot of what this is. But another is also latency, is like, and latency, there are lots of ways to define it. For now, maybe let's just say latency is like, how long does it take for you to be like 99.999% sure what a chain did? It's like for all intents and purposes, you can like start updating based on that. And that's sort of like another variable there. And that also matters. And what scale does it matter at? It sort of depends, right? It depends for different people, but in general, humans reaction time 100 milliseconds. So that's like one guidepost, right? Like if something's like that's sort of the time scale in which humans are really going to be able to tell how much latency something has. So there's a real difference between 50 milliseconds and 500 milliseconds and 5 seconds. And more and more of that, you're just cutting out more and more. Like you say, like, can you have Twitter or instant messaging on chain? Well, it depends. At 100 milliseconds of latency, yeah. At 10 seconds of latency, I don't really know. Maybe, and so and then you start to say, well, how do you need more? Do you need like 1 millisecond? Do you need a microsecond of latency? And the answer is, for some things, like there are things that are extremely latency sensitive, and some HFT versus HFT trades qualify as that. There's a lot of like scientific instruments qualify as that. And so there's some things which are just going to be very hard to have on any decentralized system, because just the communication time between different nodes and speed of flight is too much. But and so you can kind of chunk that out, but you're still left with like probably 2/3 of what the world does. And so sort of what I'm thinking about is like, how can we start to approach that remaining 2/3 of like the activity of the world getting on chain? And yeah, like when we're sort of looking at blockchains, the thing that really stood out about Solana was not just that they sort of like quoted a higher TPS number and that they could actually like, in fact, hold that higher TPS, but that like it mattered to them. And, they're sort of like trying to get faster. They had a roadmap for scaling over time. It wasn't sort of like, oh yeah, congrats, we got 2000 TPS, checked that box. Because 2000 TPS is not going to be enough forever, even if it's enough right now. And thinking about scaling with Warsaw, thinking about squeezing out another few orders of magnitude, those all really matter. So,
and the architecture of Solana, obviously, just being able to like leverage Moore's law and HPC, commoditization of HPC, and just that constant cycle, right?
Exactly.
You can scale with that growth, which is so compelling.
Exactly. So the whole thing was designed from first principles with like actually really caring about this.
Yeah.
Like people don't realize how fast that stuff changes. Like 20 years ago, I would be as crazy sounding to say that we're gonna have 1 gigabit at home as I am today saying we're gonna have 1 terabit at home. So literally there's gonna be 1 terabit connectivity 20 years from now. which is insane, right? Like I can't even imagine what the hell we're gonna do with it.
I think that like the whole evolution of like the bandwidth on the internet and what the internet made possible, it's a really good analogy here, right? Like, like ISDN was like, we have copper wire and we had dial up and it was really terrible. And then we were going to use that copper wire and we're going to just like roll ups on copper wire, right? and like, it was like, okay, but like you couldn't like stream HD video on that. And then, you've gotten these orders of magnitude jumps that are completely different architectures, and it just radically changes what society and the economy and humans can do. And that's, I think, here in this sort of trustworthy compute and transactions arena, right? That's what we're doing. Yeah, cool. So I think like the layer 2 efforts that are out there, I mean, it ties into sort of what's happening with DeFi now. And I think, we were all, or I think probably all, pretty interested in, Vitalik's original white paper, and a lot of the ideas around DeFi were there back then. And what galvanized so many people behind Ethereum in 2016 and 17, and then this like real build out that happened around these ideas in 2017 and 18, and really getting off the ground in the last year, were those ideas. And I think that the ideas are really profound. I kind of look at where we are now. We introduced USDC because something like Ethereum made that possible. And that now here we are in 2020, and there's all these protocols, and there's composability, and we're seeing the quote unquote harvesting of that, like quite literally, and all this business model innovation around it, which is amazing. But it feels like we're potentially hitting a wall, and I think just at a time when the potential for humanity and whether it be like how people move value around or how markets can function, right, potentially hitting a wall. And that's sort of why these choices around, are we building on a new infrastructure or not, become so profound.
Yeah, no, I totally agree. And yeah, I think I think something which both of you have said, just really want to echo, is it's so easy to underestimate the importance of future improvements in capacity and speed, because you often think about them in terms of what you're doing right now and think that a factor of 2 is what you need, because you're not thinking about the really unbelievable things you could accomplish if you had a factor of 10,000. And the internet is not something that people were envisioning as it is mostly 50 years ago. And a lot of that, it's not even the structure or anything. It's just they didn't realize really, wow, we're gonna get so much throughput. They would just fucking put everything there.
Yeah. Yep. No, all the world's knowledge, every human communicating instantly.
Yeah.
Every business connect, all these ways. It's phenomenal, right? So obviously, you're now, I want to turn actually a little bit in terms of DeFi, right? You've looked at a lot of innovations happening in DeFi, both of you, and I think a big project here is saying, hey, with this greater capacity, what can be built that's different? And Project Serum, is obviously, a lot of people go, oh, it's a DEX or whatever. Obviously, it's way bigger than that in concept, and I think that's what makes it so exciting. But it feels like you're building a composable, comprehensive financial market infrastructure. And talk just for a moment about the scope of that vision. And what that is, and then we'll get concrete, because you're launching stuff with insane velocity as well. So, but that vision, that kind of composable financial market infrastructure. Talk about it.
Yeah, I totally agree, and I think the sort of the first thing that came out, really the first substantial thing that came out, was an order book. I think the reason for that is that, first of all, it is sort of a fundamental building block of finance. I mean, it's just all over the place in finance. Most volume happens on an order book one way or another. And so I think it's, a super important primitive thing that allows you to kind of just express arbitrary pricing opinions, But the other reason is that it's sort of a proof of concept. It's sort of this was the hard thing. This is the thing that you couldn't really get to work on other chains. And here you can just do it. I mean, it was finicky, to be clear. It's a real pain to launch, because first of all, just building an exchange is a pain. I mean, it takes a lot of work to build one, and it's actually quite a bit harder if you're building a decentralized one, because it's theoretically it's the same. And in fact, it feels a lot more theoretically the same in some ways on Solana, because it's sort of built to mimic what normal computer programming feels like to some extent, but it's way less forgiving. Building a DeFi application, it's not just you can't fix bugs later, but you sort of take that to the extreme. And usually when you're launching an exchange, you just don't bother thinking what if someone tries to submit a bid for $13 quadrillion? Will that crash the exchange? You're just no one's going to do that. And if someone does do it and it happens to bring down the front end, then whatever, we'll put some limit on. We'll say, yeah, okay, no more than $1 billion per bid. No one will care. And if that turns out to hit some edge case with Dogecoin because its tick size is too small, then whatever. Once that'll happen, they're okay, fine, yeah, actually it's number of tokens, not number, whatever. You sort of there are a lot of cases where you just do something that you're sure will not be catastrophic and will probably work. And if something moderately bad happens from it, whatever, you'll put some heuristic in later to patch it up. And it's sort of ugly and unseemly, and it's also just the truth of how the world works. And as you dig into these platforms, you just see they're fucking everywhere. Yeah. And as you're building one of these, obviously they're there. It's it would take 20 times as long to build a platform if you had to protect against literally any possible input sequence, from the outset, right? And someone asks for a new API endpoint and you're okay, we can launch this in 2 years once we've done fuzzing on this with all possible input sequences and stress tested every single DDoS protection. No, you're okay, let's do something reasonable. And if someone brings down this endpoint at one point, then we're gonna have to put in some reasonable protection. The problem with building a DEX, an on-chain DEX, is you just lose a lot of that, right? You're sort of oh no, actually, if it turns out that's submitting $1 trillion, $1 trillion offer because the price is insane, crashes the DEX because it just has some overflow error, does that brick everyone's money in it in an unrecoverable way, right? That's like the kind of thing.
A little bit higher.
Yeah, that's what you have to worry about. And so, you know, a lot of the kind of trickiness of building something like a DEX, you know, a lot of the time was just the intricacies of each of those and like thinking out like, this is the number of bits in this number. Like, we have to make sure that like, you know, no matter what, as long as it's like no bigger than this, it won't overflow any of these buffers. And like, you know, theoretically, technologically, it's easy. It's nothing is like impossible there. It just is finicky and unforgiving. But you can do it. And you know, after some amount of time, we did in fact do it. And you know, now it's live. There's an order book on Serum, and it's basically the only like performant, you know, easy to use, fully on chain order book and matching engine in the world.
Yeah.
It's because it's like you can do the math, and like if you're 2 orders of magnitude slower than Solana, you can support like one of them. You know, you get like you get your order book. And so, but you use it, and it I mean, if you're a human, it just sort of feels like a centralized exchange. If you're a bot, you notice it's slower, but like as a human, you click a button, a second later, everything's settled. Yeah, it's about, you know, sort of GUI response time anyway. So, so I think it's like super powerful and fundamental and great proof of concept. But as you said, it's just a start. And like, you know, what really is the end vision? The end vision is, what if you got 30% of the world's infrastructure on chain? What, with 1 billion people using it, what would that look like? And then what's between here and there? Many things, obviously, many layers. But like, what might the next few be? Well, first of all, just building out all like the important primitives, starting with maybe financial primitives. But I mean, someone's building a messaging application too. It works. There's you can go to projectserum.com, see some open source code. It doesn't have a great GUI right now. It's a little finicky, but you know, a lot of this focusing on financial and infrastructure. But you know, the kind of building blocks of all of this to make it easy for people to then build their applications on top of it. And as you said, like one of the really huge things here is composability. And like, why would you bother with DeFi? I mean, there are lots of reasons. I think sort of the permissionlessness and the trustlessness is a big part of it. But I think another huge part of it is the composability, is that, you know, Anatoly builds some application, and then, you know, you want to build something that interfaces with it, and you can just do it. You know, you can just like read all of its data on chain. You can interact with it, you can send messages to it, and you can sort of compose with it almost as if it's just natively one application, without having to consult with him, without having to get his, you know, permission. And that's just like so powerful. And I think, as all of us know, you know, there's this really tempting thing to do these like joint ventures with people where you're going to build together, and they can be really powerful, and they're almost always unbelievably harder than they seem because of the seams in the middle. You spend all your time on like, oh fuck, we don't have an API endpoint for KYC data submission, and the other side doesn't want to submit PDFs because they're too big, so we can make this a JPEG. Like, that's what you spend all your time with, is like these little interfacing blobs. And like, oh fuck, we're now, our DDoS protection is like shutting off our white labels and stuff. And if you do things on chain, that all just drops away. And one really cool, powerful example of this is, if you guys haven't tested this, you should do it. If you happen to know how to like spin up a server, is, do you want a DEX? Do you want a Serum DEX? If so, it can be yours in like 10 minutes. Like, all you do is like, there's open source GUI code. You can make whatever modifications you want, put it up on your server, point to whatever markets you want. New ones or existing ones, point this sort of like GUI fee rebates to your address, and you're done. And you can't do that in CeFi.
Yeah, I mean, like, go ahead, Anatoly.
I had this like realization that like early on, that these networks are equivalent to when we went from like analog communication, direct copper line between two people, to packet switching and store and forward. We're literally like doing store and forward packet switching, but for programs and like money and data. And that's kind of like mind-blowingly awesome. Like,
it's really transformative. I actually want to come to like the bigger picture, like how does this change the world stuff in a minute. But like just back on Serum, like you've obviously, you launch order books, and they themselves, that's just like, it's an order book engine that is now composable, and anyone can build on top of it.
Yep.
it. And, like USDC is now obviously like a digital dollar that now can work in this infrastructure, and people can compose with that and program that. Obviously, that becomes a really valuable in those order books. What are the other major near-term kind of building blocks? Obviously there's sort of borrow lend, automated market makers, liquidity pools. There's, you have the pools concept, which is a more generic primitive that people could use in like a lot of different ways, and what happens with all of that. And
yeah, I mean, I think, everyone will have sort of their own pet projects, and I don't know that my sense is right, but I think it's probably not crazy of like, what are sort of really the core financial primitives? Order books, clearly one of them. Some sort of digitized dollar, clearly one of them. Like, you can't just have everything priced against themselves, and then what are sort of the other ones? Some sort of margin or borrow lending or something like that is super crucial. Like, it just underpins all of finance, and there are all these different systems for it, right? There's structured products, derivatives, there's borrow lending, margin, futures, repo, and they are diverse and have their own twists, but at their core, they're all the same thing. Like, at their core, they're all they can all just be represented by a borrow lending protocol. Mm-hmm. Like, that's sort of the core underlying technology, but behind them all is a way to be able to use one piece of capital and take one piece of capital and sort of like use it as if it were another one. Lend it out to borrow another one. And whether these are synthetic future capital, whether it's deliverable capital, whether it's like some wrapper, however you want to put it. And so something like that is really crucial. And I know some people are working on some pretty cool borrow lending protocols right now on Serum, which can just power a ton of things. And I think one of my favorite examples of the power of DeFi and composability is like, how do you build a margin trading exchange? You have a DEX, a spot DEX, you have a borrow lending protocol, and you're done. Like, you just tie them together. And it's not like now you go build your margin trading DEX. It's just like a wrapper on top that routes orders back and forth through them, and in one click can send a margin trading order through those.
Right.
And theoretically, you can do this right now in crypto. You can go to Coinbase, buy a Bitcoin, send it to Huobi, lend it out, but it doesn't, like, you got to be a quantitative trading firm if you want to like make that thing work, right? Like, it's a huge production. Whereas in DeFi, it's just like, yes, when someone builds a website on top, and that just like wraps the commands together. So that's one of the really core primitives. What else is there? Some sort of pool like object, and a pool can mean a lot of different things, but at its heart, it's like a place that you can like put stuff and then mint a token that represents ownership of that stuff. And what does that allow you to do? It allows you to create structured products, obviously. It's sort of, in some sense, a core underlying component of borrow lending, of AMMs, of a lot of other things. It allows you to do things like yield. You can drop yield into pools or onto pool tokens. And it allows you to have multiple people joining together in the same trade or the same process as they join the same pool. And so I think that's a really powerful building block for a lot of these things. And simultaneously, a lot of people are close to releasing instances of pools, a lot of AMMs and things like that, and also sort of generalized pool code, so you can sort of like customize each little endpoints, sticking out of it. So I think that's sort of another thing. And then the stuff around the edges to plug into the rest of the world, whether you're talking about cross-chain stuff, whether you're talking about fiat on-ramps, off-ramps, somehow it has to touch the rest of the world. And I think stablecoins are one example of that. Like, one way to do that is you can like send dollars and mint USDC and send it to Serum. Another version is you can interface with Ethereum or Bitcoin blockchains, or centralized exchanges that are supporting SPL tokens. But things that plug into it to let you access the system. And so I think that's another really crucial thing. And once you have those, almost everything that people are looking to build, you can go ahead and build. You can kind of put those together, put tweaks on them, and just start releasing. And so I think as those core pieces start coming into place, you're going to see is that that just sort of composing those together, allows a lot. it allows a lot of what people want to do.
Right. I mean, even where you are today, it's just mind blowing, right? Where anyone can create a market, and theoretically create a market in anything. It can be a dollar price market, and that's like in the
Yep.
UI, right?
Yeah,
and
exactly.
And when we talk about information markets and other things that go beyond people who are building financial primitives, but actually creating markets much more broadly, is super exciting. I guess like that's like a bigger picture kind of question, which is like, we're talking about market infrastructure, we're talking about sort of capital markets more broadly. As you're saying, Sam, like, how do we move, 2/3 of the world, or how do we move 1/3 of what is the financial system or some huge amount onto this kind of infrastructure? But like, the big question is sort of like, why bother? Like, why bother? How is this going to improve the world? And like, what are the fundamental, I mean, I have an intuition about that. Obviously I have a lot of thoughts about that, but like, ultimately, like, these market infrastructure innovations should create fundamental improvements in like microeconomic market structures, in macroeconomic market structures, in the nature of what even a corporation or a collective vehicle of corporate form looks like. But like, what's the why bother in both your minds about this?
I can go first. I guess like I kind of have like this is probably like too reductionist of a view, kind of like doesn't capture a lot of nuance, but like you look at Gardner reports or McKinsey reports, finance is like $20 trillion, like some 20% of the world's GDP, just moving numbers around. If the systems that provide sufficiently enough trustless, like censorship resistant computing can take a chunk out of it, I think the cost will reduce dramatically, not by 90%. That's literally giving everybody in the world a day off without hurting their standard of living. Like I'm down for that, right? Like, I want to work 4 days a week.
It's like fundamentally returning economic value to the economy,
right,
or whatever you want to describe that as.
There's no reason why it should cost more than like, a few electrons to update numbers in a computer, right? No matter what those numbers are, like how many billions of dollars they represent.
I guess like, Sam, I'd love to hear you talk about this, like just like the substance of what changes in the economy when we have a world like this.
Yeah, I mean, a ton can, one sort of like, maybe one analog for this is something that's happened in the kind of fund industry over the last 30 years, ETFs and mutual funds and things like that. And I mean, I sort of came of age as we're already transitioning to the new standard, but 20, 30 years ago, when you had some money and you're going to invest it in the market, just generally speaking, who knows what, right? Maybe some broad market fund. What fund would you put it in? What fees would you pay? And like, how much middleman taking away would there be? Who knows? It could be anything, right? Like, what would you kind of like go to your financial advisor, or like click on the one button that your like portal has? It would have like some random fee, like sit a bit a year, is it 5% a year? I don't know. I mean, it is what it is, Unlike your financial advisor, like, I recommend this fund for you. I think it's really, I really think I have confidence in it. And be like, all right, fine. I don't understand any of these names anyway, right? And I just have an extra like 3% a year tacked on in fees, and like, so be it. Like, is that the fair cost for us? Who the fuck knows? And right, and like, there are all these industries that existed in finance that were just products of this, like all these subdivisions of investment banks, that their only business, the only real business, was like, how do we like create some PowerPoint presentations around this product we're trying to launch to convince people to buy it, even though its fees are an extra 2% a year, right? Like, how do we convince people that, whatever the, like Morgan Stanley Special Opportunities blue chip fund is what they should put their money in, despite the high management fee. And the reason is, like, they even talk about the high management fee. They talk about the special opportunities. No one even knows what the management fees are supposed to be. It's like, right, like, and then what happened? What happened was the internet happened. And I don't think it's obvious to everyone at the time, but it's really fucking brutal for this business model, like really bad for it. And the problem is they're just websites. You can go to a website now and
Switching
type in
costs
like
went to zero, and like
exactly
information asymmetry was sort of blown out of the water. Right?
exactly. You just type in S&P 500 ETF, you get the list of them. You're like, okay, it seems like there's 20 of them that charge 10 bips a year, and like mine's charging 2% a year, and I see it here at place number 30,000. Maybe I should not buy this thing that my financial advisor said I should buy, and maybe I should just buy like VOO instead, you know, and like just like over a decade, just completely killed these funds that never served any purpose except for upcharging people, because there's just this like global trusted database of all the options, and it's just a number in the end management fee. And now you just can't really get away with high management fees. And yeah, there are things you can do, like there people are still finding ways to upcharge people, but it actually did take 80% of the money out of that game for getting people to invest in funds, and each year you can look at open interest graphs for ETFs, and each year it takes a little bit more in the direction of the low cost funds. Vanguard's just like slowly going up. And that's great. It sort of cut out a ton of bloat. And that's sort of very similar to a lot of what you get by or what you could get by putting things on chain is you get an open ecosystem. You get an ecosystem where everyone has access to everything and everyone can see everything and just like look at it, and like the equivalent of the management fee is just like a number on chain, and you can like look at it and be like, that's too big, I want to use this one instead. You can compare the system you're using to the system other people are using, and I think it has the potential to take a lot of the duplicative work that the world has right now, where people rebuild the same thing over 3,000 times, not to refine it, but to be able to rent seek on it in their own way, and just sort of like cut through a lot of that.
What do you think it takes to tokenization is sort of this bigger theme, right? And if you have a market infrastructure like this, like it becomes infinitely more valuable if the tokens that are on it are ownership and or assets or other things, right? Future cash flows of a business or
right
project. How do you see that maturation process, and sort of what are the markets that are realistic to be on this now versus in 12 months, 24 months, 36 months?
Yeah, it's a good question. So I'd say a lot of things could be on it now. Not all businesses, but many businesses could be. But realistically, most won't, because it's just the tooling around it isn't built out enough that, like, as someone who has no idea what a blockchain is, you can just go click the put your business on a blockchain button. Like, no, you need to have like blockchain developers and stuff. And that's just like, a threshold that most won't cross. So it's going to be kind of random, right? Like which businesses are on it now. If you're building on Solana, it has the capacity to support a lot of businesses. And so it's less going to be, could it be? And more just going to depend on, like, does your particular company happen to have a bunch of blockchain developers on it, Yeah. And if so, then yeah, maybe it will be. And if not, not yet, check again next year. And, we'll see what happens over time. But the goal is that over time, this just starts growing and snowballing. And, each year, another 1% of all companies build out the infrastructure and support. It's not that hard, right? Like especially for like a giant company, we're talking like hire a team of 5 people and they can do it.
Yeah.
But like, it's, you have to actively decide this is one of our corporate priorities. And so, each year gets easier and more popular, sort of the goal. And then the other thing that I'll say is one thing, which is like, I don't know if it's a downside of on-chain stuff, but it certainly is a pitfall, is that it's so easy to mint a token. Like at some point, I think a lot of people in crypto have had this light bulb go off. And the light bulb is like all this jealousy towards other people who have a token and you don't have a token. And then you're like, what if I wanted to make a token? How hard would that be? And like, wait, is it really 5 minutes? Like I just Googled it and here's a website where you can click the make a token button. Does that work? And you're like, oh God, that works. That's what was stopping me all this time. I didn't Google mint a token, please. And then people just go wild.
Well, this is like where, like, this is the composability thing of like, if you have like stable coins, right, you can actually have like the treasury of a business and all of its flow. Yep. You can have it, you can have a contract with it where it's got output to you, as a token holder. You can put voting and governance and, what is a corporation after all? But
Exactly.
treasury, and it's a voting system, and it's a contract for token holders, right? So
Yeah.
I mean, that's like the innovation curve. We need people who are thinking about building these quote unquote digitally native corporate forms that are just, they exist in the global internet, they exist on chain, they exist in, and they're, the enforcement, if you will, of that is done through, you know, smart contracts, and just, we have the building blocks there, right? So I'm not sure it's going to be like the big companies first. It's probably going to be like more.
It's going to be small and medium-sized companies that like have someone high up who's excited about this, you know, at the beginning. But yeah, like one of the most amazing and powerful things is how relatively easy it is to do this. One of the pitfalls is that it's easy to do this even if you don't have anything. And we've definitely seen a little bit of that this summer, where people realize, oh, I could just mint a token tomorrow. And people don't go through the work of like, maybe I could create a useful, valuable project and then put a token in it. They skip that first step and they're just like, I'm going to have a token. No one has grabbed tacos yet. I don't know why. No one claimed the taco token. I'm launching the taco token. We're going to figure out what it does later. And it does mean that like it's really easy to mint vaporware. And you know, I think that's something that the space is just going to have to contend with. It's a really fundamental property of it, the openness. And it's, you know, you can deal with it. Like it is not fatal or anything, but it does mean that, you know, people just have to be a little bit cognizant of that and you know, figure out how to have some sort of, you know, trust systems in a world where the barriers for building something that looks like a product aren't so high that only a legitimate company would be able to do it.
Go ahead, Sam. I'm sorry, Anatoly.
I think like even that is also like something that's really kind of remarkably innovative, is the ability to like organize people around like a fungible thing, is like governance. And like it seems like very like vaporware right now, but I remember like 6 Degrees and those super early like internet social networks that were just seem like, this is cool, but I don't know what to do with this. I don't know why I care if I'm separated by like, you know, 2 degrees from somebody famous. I think these kinds of experiments are going to like be doing something interesting. And like when we get to 300-400 million people all organized by a single token, I think that's going to be kind of probably worth more than Facebook for that many users, right? Like there's something really cool there.
I mean, I think that's what I'm excited about, is like we're going to see, we're very likely to see, like, I use the word corporate form, but basically like new corporate forms that people participate in, and that they have an economic relationship to, and that it organizes work and it organizes like creative output, and it's all run entirely in software on chain on this infrastructure. And it seems like now like the building blocks for that are kind of falling into place. All right, cool. We're running out of time. I have to ask a USDC question, which is like, I think, you know, you guys have like all seen USDC grow, and it's been a big year, and we're talking about all this infrastructure opening up and all these opportunities opening up. Like, you know, something like USDC, it's like 3 billion-ish today. Like, what do you think in 12 months, 24 months, where do you think USDC will be?
Yeah, it's a good question. And, you know, I think a lot of people really radically misunderstood the stablecoin business model. I think, like, do you remember, what was it? Was it late 2018, the like month of stablecoins, when everyone is doing nothing but talking about all the different stablecoin companies? And it made no sense because, first of all, everyone seemed to think that you get $150 million under management as a stablecoin company. It's the best company in the world. But the profit, like the margins are not big on these things. Like that's not worth that much. And also everyone seemed to think that like there was, like everyone seemed to like elide the question of like, what are the advantages and disadvantages of various ones here? And sort of like you made a stablecoin and all of a sudden you're a hot company. And I think that like it sort of missed, two big things. The first is that all the like really huge outcomes here aren't getting huge, right? It's like, you know, how does a stable coin become extremely valuable? It's when you start measuring it in billions and tens of billions and hundreds of billions. It really isn't the scaling of it. And second of all, people try to be way too cute with the model of it and the structure of it. You know, people are sort of like, oh, my stable coin is algorithmic and like you can only create it on Tuesdays. And it's just like there's just like lots of ways to make it a little bit worse, and it's sort of like everyone had their own theses on it. And but what, if it's a tokenized dollar, there's sort of just an obvious way to do it. And that a lot of slight improvements you can make that are like really intentionally thought out, but like random perturbations just make it worse.
Mm-hmm.
And what's sort of the fundamental thing here? The fundamental thing is just building a good product. It's just like making it work really well. And going back to the scaling thing, like making it able to massively scale without friction. And I think that that's always sort of been USDC's calling card, has been like, how can we like make creations and redemptions of it as easy and cheap and fast as possible? How can we like make sure that there's as little bullshit as possible that slows it down so that it can just sort of seamlessly scale up? And anyway, it was sort of like this really mysterious month of everyone building products that were like obviously later to the game and 20% worse than USDC, and trying to become the hottest crypto company with like no roadmap to like, but anyway, so, where could it get? I mean, it's really hard to tell. And I think that like one thing Tether has shown is that most people haven't thought hard about that question, because every year Tether breaks a new record for open interest on stablecoins. Like, holy fuck, like billions, like 5 billion, 10 billion, 15 billion. And it's sort of like, like what happens if like, if Jeff Bezos wakes up one day and decides he wants to put some stuff on the blockchain, it might go from 15 billion to 50 billion overnight.
The block sizes, no pun intended, they're really changing, right?
And that's right.
The step function changes of like the types of capital that get deployed into this form factor of money. It's just, and like, I don't think people quite see how whatever dollar money markets are, how many $1 trillion?
Exactly. It's sort of the same thing with TVL and DeFi. People are shocked as it kept getting bigger. It's like, I don't know, guys, like, if you're paying $1 million a day, how much TVL are you gonna get for that? A lot, yeah. You need $1 billion of TVL. It's not that hard. Like, if that's what you want. And similarly here, like, this isn't the paying for it thing, but this is like there being demand for it. But how much demand is there for liquid money like things in crypto, like billions, tens of billions, hundreds of billions, maybe trillions at some point? Sure. So it really depends. Like, it could be anything. And like, I wouldn't be shocked if it shrank a little bit. I wouldn't be shocked if it added 2 orders of magnitude. And over the next year or two. And what's really going to just determine that is like just how much demand is there. Like, how fast is the crypto ecosystem growing? How many people are trying to get into? How much money is trying to get into it? Like, is a quarter of that going to end up in stable coins? I don't know, something like that.
Well, we're seeing tons of people just doing investments in USDC. I mean, we're just seeing so many people who just the receiving firms and others. And now, obviously, with like USDC on these new platforms, and just obviously like Solana, like a 300 millisecond digital dollar is pretty awesome. So we're excited.
Yeah, I mean, I'm super excited for that. And I think obviously I'm a little biased here, but I do think it's great for USDC as well, from thinking about it from the perspective of like, how do you position yourself as the stable coin? And I think like he's done a great job of just making it really easy to use. But I think also like, it sure would be a shame if the answer is like the scaling platform ended up centering on some other stable coin. And like that, and I think that like making sure that you look at the sort of like plausible routes to where a lot of this could end up, and that it supports those is really key.
Yeah, it's awesome. Any closing thoughts from you on this, Anatoly?
I think like people often talk about like these big companies coming into the space, like Visa, MasterCard, or even like Facebook, like Libra. I often think that like it's the innovators and the early adopters like you guys that are going to take these very obvious things, a dollar that's cheap and fast to use, and make it global. So I am like just super excited about the boring stuff. Like, we can do point of sale now under 2 seconds. Like, that's but that's trillions of dollars get moved every few months, right? If not,
use case explosions is like the awesome thing, and like that's just where everything's like clicking into place. And it's awesome to collaborate with people like you guys. This is a lot of fun. So it's gonna be an interesting couple of years.
Awesome. Yeah.
Awesome.
Yeah.
Well, listen, guys, thank you so much for joining today, and looking forward to all the stuff we're going to keep working on. And yeah, awesome. Thank you.
Yeah, of course.
Cool. So great show this week. I'm really grateful to have Anatoly and Sam, and excited for next week. Until next time, stay well, stay safe, stay informed.
Yeah, you too.
All right.